Hello guys, welcome to BARWARI Capitals. This is my university where I show you everything from scratch how to become a profitable trader. And today we're gonna go through market structure. We have already went through the candlesticks. Candlestick is done. We are gonna go through market structure. Inside the market structure you have expectational order flow. We have strong and weak points. We have a break of structure and change of character. You may ask what is a break of structure and what is a change of character. So these words, it's break of structure is it's a break of structure. Change of character is change of character. This is the terminology for this, and I'm gonna go through with you guys how I view the markets. First, in just drawing it, then we're gonna go to the charts and practice it. So let's go right through it. First of all, we have trending phases, and trending phases we have something like this. We're moving up, and we have something like this when we are moving down. We have something like this when we're just ranging. We're not moving anywhere, we're just accumulating and consolidating right here at that moment. So this is the three phases of the market. Every market you know, and you can go for yourself and see every market either is up, it's going up, or it's going down, or it's going consolidating, and this is can happen in the 1 minute time frame, in the 15 minute, in the 4 hour. It you have to tie it together, and we're going to go through the multi-time frame analysis later, how you can tie everything together. That's the important thing with the time frames. But now this is a bullish bullish market. This is a bearish market. This is a consolidating phase. So here, so we're gonna study everything now. As you notice with the bullish structure, every time we make a high, we came back, make a low. Every time we made the low, we go up and make the high. We break that structure. That's the break of structure. We break that structure to the left, go up. So now we have a clear picture of what the price is doing. We're gonna move down one more time. After the move have gone down, we're gonna go up, break structure one more time. Now we have done it 2 times. When we break structure 2 times, it becomes a confirmed trend. It becomes a confirmed trend, and we will most likely in the third impulse. Impulse is the I call this impulse, and this phase the retracement. We have impulse, we have retracement, we have impulse, we have retracement, we have impulse. So of seeing break of structure 2 times, the most likely thing we're going to do is come back and break structure one more time. This is a bullish market, and this is how we use break of structures and identify a bullish market. So that's the just basic. Just keep it basic like that. So how are we going to measure this? How are we going to look at this? It's exactly the same way, where we have that low, made that lower high, this lower high broke structure and made the lower low. This lower low retraces back. the retracement is gonna take and break structure to make the lower low. We're gonna get the lower high one more time. This is lower than that high. That is the lower high. This high is lower than this high, which means this high is lower than that high, which is a lower high. We see lower prices. This high is lower than that high, which identify this as a lower high. This low is lower than this low, which make this a lower low. This low is lower than that low, which make this a lower low. Basic, guys. This is easy. Come on. This broke structure. So always check to the left. What is breaking structure? What is breaking structure to the left? And that is your break of structure. That high, lower high led to this low that broke structure to the left. This low is lower than that low, which means that's a break of structure. That low right here is lower than that low, which means this low is lower than that low, which means that's a break of structure. This low is lower than that low, which means that is a break of structure. This lower high is lower than that high, which means that's a lower high. That's our swing high, that's our swing low. We're inside this range right here. This is the impulse down. This is the retracement up. Imagine we are inside here. Inside this line to the right, we have printed the lower high, made the lower low. What's the expectation right here? To make the lower high lower than that high, to make the lower low. Because we know this low is lower than this low. So the most probable thing to do is to make another low. That's more into expectational order flow, which we are going to go right through. Important to keep in mind is always the impulses down is going to be lower than the retracements up because we are moving down. I like to call this like view it as a river going down. This is the river going down. You can't go, imagine, it's so easy to go with the river down than to fight against the river and go up. Because we never go up, we never broke this structure, we always go down. It's like if you throw, let's say you throw some, a book or something in the river, it is gonna take the river down. That's where the river is flowing. We are not flowing up right here. Here we are flowing up. The river is going up. We are strongly moving upsides. So the bullish candles are going to be much stronger than the bearish candles. And we're going to have longer impulses and shorter retracements. Of course, when the retracements are going, it can take much longer than the impulses up. And yeah, that's the thing. This is a consolidation phase where we are just stuck inside a range and accumulating. We are only accumulating right here, and it's a dangerous place to be inside. Here we are not going anywhere. We are breaking structure up, we are coming down, we are stuck inside this, we can't take this high. We take this low, we take that low, we come back up, we try to take this high, we can't do it, we take that low, we take this low right here, we make a lower low. Now we're going up again. It's no clear direction. This is a consolidation phase, and most likely we're not gonna get involved in this leg because it's no direction, it's just moving like this. And here is where the most impatience and greed and FOMO and all the psychological factors gets accumulated here because we get impatient. Let's say this is a week of price action on gold, for example. Then you're just gonna, if you have a full week of this, trust me, you're gonna be impatient. You're gonna look and chase setups. You're never actually gonna take if the price was going efficiently. But you see, guys, the market's affecting in a lot of ways, and this is where many people lose until we get a manipulation, let's say to the downside. We take all willing buyers, the early buyers, the patient buyers, we take everyone to take price back up. Okay, this is a clear like entry model of what I use. We manipulate everyone, the buyers, the early buyers, the late buyers. We manipulate every seller that they think that prices are going down because it looks that way. After that, the buyers are going to take control and get the price up. So this is the manipulation, this is the accumulation, this is the distribution up. That we're going to go through later, and I will show you everything with my strategy. So this is the basic structure, how we can view the market. And yeah, this is like basic break of structure. But at one point in the leg, we are gonna get a reversal. So not always we are gonna move up. So at some place we're gonna do something like this. We're gonna take that time and bam, manipulate. Manipulation had already happened to the upside, but we get a break of structure, change of character to move back down. Notice what happens here. We are making higher highs, higher lows. Each time we make a higher high, we make the higher low to make the higher high, to make the higher low, to make the higher high. Boom. We get a change of character. Here is the first sign of a trend reversal. That's the first sweep. Here's the second one. Here's the confirmed trend. Now we know that prices are going to move down. We now see that we have a change of price, a change of order flow. We are making lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. After the change, because at first we were making low, high, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher low, higher highs, change of character. We take all this accumulation right here, manipulate, bam, distribution down, takes the change of character, breaks structure to the downside, gets the change of character. A change of character is simply just that we break structure and get a trend reversal. That's a change of character. Forget those fancy shit words. That's not my point. My point is just to learn you how to view the market and understand it. Guys, the flow of the river is moving up till we get a stop, full stop. We make a high again. The river is going down till we go aggressive down, quickly down. We see a clear change. Now the impulses down are longer than the retrace. It's much longer, and we can see that we have a clear change. It's like a mirror. We mirror the price to go down now. And here are the change. So this is clear like order flow shift. This is order flow, guys. We're going up till we no longer go up, we go down. Because it's not always prices are going to go up. Everything that goes up must come down. And everything that comes down must go up again. That's a basic law in life. So yeah,